Hi students, good evening. Now we'll start with the last and the final module, that is module number 4. In that we have only one chapter, that is final accounts of a sole proprietor. The next item is repairs of plant. Now plant is used for production purpose, for manufacturing purpose. So all expenses which is related to plant and machinery will come in your manufacturing account. So repairs of plant will come in your manufacturing account directly, outer column 1200. The next one is repairs of office furniture. Now office furniture is your indirect expenses which is used in your back office. So repairs of office furniture will come in your P&L account, repairs of office furniture. The next item is purchases of rupees 1 lakh, that is definitely purchases of raw material. So that will come in your manufacturing account. You will add in your opening stock of raw material rupees 1 lakh, again in inner column only. Next one is cash at bank, that is your asset. So it will come in your balance sheet. Just below the bills receivable you can put, or you can put after the closing stock, cash at bank 2300. Next one is plant and machinery, that is your fixed assets. So that will come first item in your balance sheet, plant and machinery. There is a depreciation on it, so it will come in your inner column 90,000. The next one is office furniture, that is rupees 5,000. That is again, it will come in your balance sheet rupees 5,000. The next item is rent. Rent is your P&L item. So go to your P&L account and you put rent, but rent is used partly for office and partly for this. So in both way rent will come. So you can see in your manufacturing account you will put rent as rupees 5,000 in your manufacturing account. Understood so far? Yep. Go to the next one. Lighting expenses rupees 1,800. Now lighting is also used for the production purpose. So we can put over here lighting as rupees 1,800. That is used both for office and both for factory. So factory part will come in your manufacturing account. After giving the adjustment, the balance part will come in your P&L account. So in both manufacturing as well as in your P&L, lighting item will come. Next item is factory insurance. Definitely it is related for the production. It is related to factory. So it is a part of manufacturing account. Factory insurance, there is some adjustment. So we have put it in inner column. Factory insurance rupees 2,000. Next one is general expenses. Definitely this is indirect expense. So it will come in P&L account directly in the outer column, general expenses. Now come to the credit side. The first item is sundry creditors. Go to the balance sheet. On the liability side, put sundry creditors just below the capital. The next one is bills payable. Below sundry creditors, you can put bills payable as rupees 8,500. No adjustment, so you can just put it in your outer column. Next one is sale of scrap. Scrap means whatever the waste material which has been arised. So that it is a part of your manufacturing account, but that is a part of your income. So it will come in your manufacturing account, credit side, sale of scrap. Understood? Yeah. Next one is commission, that is your indirect income. So it will come in your P&L account, credit side, commission rupees 400. Next is provision for doubtful debts. Now whatever the doubtful debts items which is there in your trial balance, that is your old RDD, or you can say it's old RDC. So that is a part of your P&L account, the doubtful debts which will be deducted from your new RDD which you are making. So I've deducted over here is old RDD 1,600. New RDD will come from the adjustment that we will see later on. The next one is Dipali's capital account, that means the capital of the owner. So that will come in your balance sheet, capital account, first item on the liability side, rupees 1 lakh. And the last one is sales of rupees 2 lakh. That will definitely come in your trading account, credit side, sales of rupees 2 lakh. Now all these effects, all this posted, I posted the entry. Some are related to manufacturing, some related to trading, some related to P&L account, and some related to balance sheet items. Now these items which are posted in my inner column, on those items there is some adjustments which is being given below. Whatever the items which are posted directly on the outer column, there is no adjustment. Now we will go for the adjustment. See students, for the adjustment we have to give two effects. Why two effects? Because our accounting system is based on double entry system. So every item has one debit corresponding to one credit. But whatever the items which were there in our trial balance, that is only the posting is there. So there was only one entry for that. Understood? So now see, the first adjustment is being given. There is a closing stock of raw material as well as closing stock of WIP as well as your closing stock of finished goods. Now closing stock is your asset, so it will come in your balance sheet asset side. You can mention closing stock of raw material, work in progress and finished goods one by one. Make a total of all three and you can put in the outer column 31,000 over there. Now all this closing stock will be posted. The second effect will be go in their respective account. So the first closing stock of raw material will be deducted from your raw material consumed item. So you can see in your manufacturing account closing stock of raw material which I have deducted 15,800. So after from opening, add raw material, purchase of raw material minus closing stock of raw material, raw material consumed figure coming as 1,07,200. So in that what I have done, opening stock of raw material, then I purchase whatever the raw material which I have purchased. From that I deducted the raw material, closing stock of raw material, and the final balance that is known as raw material consumed, which will come in my manufacturing account, that will come as a 1,07,200. Next you have a closing stock of finished goods. One effect you have already posted in your balance sheet. The second, closing stock of finished goods. As the opening stock of finished goods has in trading account, so closing stock of finished goods will go also in trading account credit side by closing stock of finished goods 18,200. And the last one is closing stock of semi-finished goods. You can also say closing stock of work in progress. Semi-finished goods is also known as work in progress. Understood? So that will again, work in progress is a part of manufacturing account. So closing stock of work in progress will be credited to your manufacturing account rupees 7,000. So see, first adjustment I have given two effects. All the closing stock, see, closing stock of raw material and WIP has been posted to trading account. Closing stock of finished goods has been posted to trading, and the closing stock of raw material and the WIP has been posted to work in progress. The second effect, as your closing stock is your current assets, it's an asset, so the second effect has been given to my balance sheet. See, one adjustment, two effects. One is a debit, the other one is a credit. Go to the next adjustment. What it says salaries of rupees 2,000 and wages of rupees 2,000 was paid in January 2014. These are the salaries and wages of 2,000 are pertaining to December month. But I didn't pay in December, I paid in the next month, and I'm closing my books of accounts on December. So there is some outstanding expenses. Now this is my liability. So now my liability will come in my balance sheet liability side. You can see over here is in outstanding expenses. I'll mention salaries of rupees 2,000 and wages of rupees 2,000. There is one more adjustment of lighting, which will the next one, but here there are two. Now you have to give effect, second effect respectively. Now salary is your P&L item. So in your P&L you have mentioned salary. You can check over there. Come to the P&L account. That is a salary of rupees 10,000. You have to, whatever the outstanding balance is, that means I still have to pay. Understood? So whatever the outstanding expenses are there, that is your liability. So you have to add it to your expenses. So from the salary expenses of 10,000, again 2,000 is still payable. So I add 2,000 and my final balance comes to my P&L account is as rupees 12,000 salary. The next one is, I told what is the again outstanding amount is wages. Wages is a part of your trading account. Trading account inner column we have mentioned 12,000 which was given in the trial balance. You will add 2,000 outstanding amount and the final amount will come in your trading account as your 14,000. So wages will come as a 14,000. So far understood? So here also we have given two effect, salaries and wages outstanding. Now outstanding is your liability. So I put it in liability side, and accordingly both the expenses I have added to my expenses because these are still payable by me. So I already added to whatever the expenses which I already incurred. Come to the third adjustment. Lighting expenses are outstanding rupees 600 and insurance is prepaid rupees 500. Now here one expense is outstanding, one expense is prepaid. Now outstanding expense, same effect. Go for your balance sheet, outstanding expense of rupees 600. See, now my outstanding total expense comes to 2,000, 2,000 and 600. So the total outstanding payable is 4,600. Now in lighting, you come to where do you put the lighting is in your manufacturing account. We have put it in inner column of rupees 1,800. In that you will add this 600. Understood? So I've added 600. There is one more provision that we'll see later on. Now the insurance part is prepaid. When I say my insurance is prepaid, that means I have already paid in advance. So that becomes my asset. So it will come prepaid part in your balance sheet asset side after your cash and bank account. The last item is prepaid insurance rupees 500, and this is my asset because I have already paid in advance. In advance only I have paid it, so it becomes my current assets. And whatever the expense are there, now as the outstanding expenses are added, prepaid items are deducted. So you can see in factory insurance 2000, I've already deducted 500 of prepaid. So in my outer column the insurance comes as 1500 because it is being prepaid. Two effects has been given. Prepaid hai, so it will come to your current asset side and it will be deducted from your expense account. So here also two effects I have given. See, each and every adjustment has a two effect. If you are not going to give a two effect, your balance sheet is not going to tally. Because what the accounting principle says, double entry system of accounting, is every debit has a corresponding equal amount of credit. So once you give a debit of rupees 500, you have to give a credit of somewhere and the other rupees 500, whatever the nature of the rule, accounting rule says. Understood? Next we'll go for the entry is very important entry. It says 25% of the lighting expense and the rent, both items, रेंट का भी और लाइटिंग एक्सपेंसेस का जो भी टोटल है उसका 25% is to be charged to office premises and the remaining. Now 25% is for the office premises. That means definitely remaining 75% is for the factory. That means lighting as well as my rent, because I am using the floor space or the building for my factory purpose also as well as my office purpose also. So accordingly, whatever way I am dividing, whatever the area I am using, that 25% I am using for office and the balance 75% I am using for my factory. So 25% of lighting as well as rent I will transfer to my P&L account. So you can see over here in your lighting expenses, after adding a percentage of 1800 plus 600, that comes to 2400. From that 25%, that means the 1/4 part. So 24 ka 1/4 part is 600. I have again deducted that. I will transfer to my office. Office means my P&L account. So after deducting over here, your lighting final balance comes in your trading manufacturing account is 1800. The balance 600 which I am transferred to P&L, that will appear in my P&L as lighting expenses of rupees 600. The next item is 25, but the balance part is, now the next part is what you have to transfer over here is my, you can say over here is lighting and the rent. What was the rent which was mentioned over here? Rent was 5000. Now 5000 ka 25%, that means 1/4 portion comes as 1250. That has been used for my office purposes. That means 75% has been used for my factory purposes, or you can say in my manufacturing account. So you can see in your manufacturing account plant rent of rupees 5000. From that 25% is deducted, that is 1250. That 1250 I transferred to my P&L account as a rent rupees 1250. And here now after deducting 1250 from 5000, here the final rent come in your manufacturing account is 3750. Understood? So there is an apportionment. It is not like some kind of entry, but the whole expenses, some part has been used for office purposes, some part has been used for my factory premises. So whatever the part has been used, accordingly I have divided those. 25% is used for office premises, so 25% of that respective expense has been charged to P&L account. The balance 75% is in use for my factory, for my manufacturing expenses related, so that will come in my manufacturing account. So I just apportioned that entry, balanced. It may be a 50-50%, it may come as a 60 or 40%, but here it is 25 and 75%. So whatever the percentage relate to whichever area, you will transfer over here. Here 25% is used for office. That means 25% will go to my P&L account and the 75% will go to my manufacturing account, because that is used for my production purpose. That is used for my manufacturing purpose related. Understood? Understood? Yeah. Thank you. Bye-bye.